All right, so in today's video, we're going to take a look at the RSI indicator. I'm going to give you 4 secret tips regarding the indicator or how to use it. They're not really secret tips. Most things in the market are known. It's just maybe not known to you or me. So I'm going to try to explain these things for you and give you a little insight. Keep in mind, you got to use any indicator with usually another indicator or in conjunction to kind of confirm your thesis, your analysis, because technical analysis is not 100% accurate. It's just giving you a guide, a tool. It's like looking at a fuel gauge. It kind of looks empty, but it's still not fully 100% there. So anyway, when we start looking at RSI, we are going to take a look at the Wilder's RSI right down here. And anytime we're looking for the indicator here, remember, this indicator kind of tells you if things are overbought and oversold. And, it could be overbought for a while. So here you could say it's overbought, but then it sells off a little bit, and then again you get to another zone and it's kind of in that area again. So remember, use it together with other indicators and other signals. And the other point I want to make with this is that when you start looking at let's say certain stocks that have a trend, so pulling up this stock right here, this is PayPal, we've got this indicator that's showing you things are oversold. Here's oversold. So you just kind of take a look right here and down here. So it looks oversold, but it continues to be oversold for a while. Yes, you get a little bit of sideways action and then right there. So what it's doing is that when you have a trend and you're looking at these trends, these things can be misleading with trends. So when you're looking at the RSI, if you've got a trend, it can be misleading. So be careful with that. So anyway, let's take a look at this indicator, how it works and how it operates. What it does is it takes some of the high bars and low bars, and then it gives you kind of a rough estimation of things are overbought or oversold. That's the simplistic way. I'm not going to go into the full formula in here. That's more in the mathematical sense. I'm going to show you how to use it and how to apply it more so. Okay, so first tip when we look into the RSI indicator, I'm going to give you is to stretch your RSI so it's easy to see. Now down here, what you'll notice in this, this is TC2000. This is by Warden. You can use this for any other types of things. But what happens is that you got an indicator right here, but notice I've got the highs and the lows, and we've got an RSI of 14. What I can do is edit this, and notice what's going to happen is if I go to from 14 and I go to, I'm going to start stretching this. I'm going to go to maybe 10 points, and what it does is start stretching the overbought and oversold. So the overbought is above that 70, oversold is below this 30 level. Now, by stretching it, it kind of gives you a little bit more of a signal, but that also means you get some fake signals. But since we're not using it alone, it should work out okay. So that's the point with this one is that, hey, I'm stretching it so it's just easier to see. That's kind of tip number one. Okay, when we start looking at something like PayPal and I start seeing the RSI, normally what you're doing is I've got this RSI, it's coming in, and it's right there, it's overbought. And in this case, this signal worked out pretty well because the trend here started to continue to go down. And even though we got this oversold area, it actually still did continue going down. So when you're using this indicator, what you're doing is you're going in, you're seeing this indicator, but use it in conjunction with other technicals. So if you see another point of, let's say, support or resistance, then that could be a better signal. Again, remember, use it with other signals. So we're coming in, we're overbought, and right there you could enter it based on, hey, this is an overbought signal, but you want that secondary signal, or maybe another indicator to help out with this, to confirm the move, like maybe a MACD or something along those lines. So now what we've got is we've got this level or this area. The other thing I want you to point out and understand is that the 50 zone, okay, the 50 zone can also be used as support and resistance, or an overbought or oversold level, depending on the stock. So what you'll see and what you'll see happening in this case is we kind of got into this 50 zone, which is right there, and we had a little bit of a bounce. So it was somewhat of a support level. If you start backing this up, and you'll notice in a lot of cases that 50 will act, especially right here. Let me bring it into this zone right here and stretch it out. Let's get rid of this volume. and stretch it out. And what you'll notice is we've got kind of this 50 level as support and resistance. And what you'll find is that, okay, the stock goes down. We are kind of oversold. You should get a bounce, but we come going sideways, a little slight bounce. We get into the 50, which acts as kind of the 70 level. It's now overbought. And then we continue the rejection pattern down there. Now, this is probably earnings right there, so we got a little spike, but we continue to move lower. So anyways, using that 50 level right here can also act as a little bit of an overbought or oversold, depending on if you're coming from the bottom area coming up. It could be an overbought area. If you're coming in from the top area, it could be an oversold area. So you'll see down here, we come into this zone or area, we come up and then we sell back off. We didn't quite get to the 70 level. So we're actually using the 50 level in there as a little bit of a support and resistance. You'll also see that over here and over here, there's a couple zones, even though we've had some of these high points. So that's kind of another thing to watch. The third thing that I want to point out is that when we're doing this indicator, watch out for a reversal crossing rather than a break. So what most people do is, if you're looking at this indicator, what many people do is they're getting into the trade. I'm going to go into another stock here, and they're going in on, let me see, a good example might be IBM here. So what they're doing is they're going in when it goes right there on the crossing area. And unfortunately, it's crossing down. You might say, hey, this is the time to buy, but it's not. It's crossing down, and it can remain oversold for a while. And that's where things get oversold. And now as we cross back up, so there's kind of 2 points you can get into this. You can get into it kind of, let's say, at the early spot, but this is a little bit of a high point, or at the spot after a slight digestion, and this is where it's actually crossing back through on the other side. This applies also to the other end, where if you see the stock kind of going on the downside, so let's say we've got it right here. So some people will say, oh, it's we are overbought in here, but you can see it's been overbought for quite a while. And the better approach is probably when it's crossing this zone right here, where it makes a little sense. And then we still kind of digested a little bit, and then finally started to go on the follow through later. So that's another thing, is to watch for the reversal part of it rather than the initial break. All right, and the fourth thing that I want to mention for you is that you can also look at trend lines. They can also be drawn on the RSI highs and lows. So in fact, the area where you are at right here, so if you kind of look at the points that we have, we can connect that right there. And you can see you've got a resistance line on the RSI, which also moves kind of with this. Now, it doesn't exactly perfectly match here on the trend lines, but what I'm saying is that RSI is slowly bleeding to the downside as stock prices are also heading lower in most cases, with the exception of right here, which is a little bit higher. So there's your little pop, but that's what created that resistance zone. And then we continue to move to the third level or third zone. And then as we progress, which you can kind of tell right here, is as we draw this, we can look at a break, which is another way to look at it, is you're breaking through at this spot, and there's the breakthrough at that spot. That could be your entry signal to now go to the upside or further. So anyways, those are a few tips I want to share with you on how to use the RSI indicator. Not everybody's kind of using it in this way, but if you are, great, let me know in the comments. There's a ton of you that post and comment, so truly appreciate it. Thank you. If you're not, or you're still confused, let me know what other videos I can make regarding the RSI. But truly appreciate you sticking with me. Thank you for the support. Feel free to check out tradersfly.com. There's a lot of great freebies in that area and in that section. Download them, grab them, free courses, webinars, all on the website, and much more. Thanks for joining me. I'll see you next time.